Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hey there, welcome to the College Investor Audio Show. So glad you're a part of this today, especially if you're an international student studying in the United States. You know that you might face barriers to funding your education. Man, it's more difficult to work as an international student, and the federal government of the United States doesn't extend loans to international students. If you're looking to study in the U.S., you may need to take out private student loans to finish your studies. These are also the types of loans that DACA recipients, DACA recipients, may use to fund their education. We compared the best lenders for international students seeking an education in the U.S. So here are just 5 companies that we're going to touch on today that offer the best student loans for international borrowers. Empower Financing, that's just the letter M and then Power Financing. They're a company dedicated to helping international students, asylum seekers, and DACA recipients fund their education aspiration. Now, the company offers fixed loans with 10-year repayment periods. During school, you will make interest-only payments, and the official repayment period starts 6 months after you graduate. Ascent, A-S-C-E-N-T. This private student loan company offers loans for international students with or without a cosigner. Very important. So to qualify for no cosigner loans, you must be a junior or senior in college or a graduate student. Borrowers have a variety of repayment options, including deferring all payments until graduation. Repayment terms can vary, anywhere between 5 and 15 years. It's important to note that Ascent's loans can be either fixed or variable interest rate. Ascent offers a cosigner release program too. So after 24 months of on-time payments, your cosigner may be released from your student loan. This means they will no longer have a financial obligation to pay the loan if you can't make the payment. Discover Student Loans. They are one of the few private loan options with interest rates better than federally funded student loans in the United States. Very cool. If you have a cosigner with strong credit, or you have strong credit too, you may borrow at very inexpensive rates. These loans have flexible repayment options, including deferring payments in school. Loan repayment terms can be up to 20 years, depending on the type of loan you take out. Prodigy Finance. Now, these are loans that are designed for international graduate students coming from emerging markets. That includes the Indian subcontinent, China, most of South America, a lot of Central America, all of Africa, and parts of Eastern Europe. Students do not pay on the loans during school, and the repayment periods after graduation range from 7 to 20 years. The average APR on the loans is 8.4%. Prodigy Finance charges a 4% administration fee, which makes these loans a bad choice for anyone who can afford to aggressively repay the loan after graduation. Citizens One. So, if you have a U.S.-based cosigner, Citizens One Bank offers very low-cost loans to international students. The rates are close to or even below the rates on mortgages in the United States. Students can defer loans for up to 8 years during school, which makes this an excellent choice for people pursuing medical or engineering PhD programs. So the question, should you take out student loans as an international student? Studying in the United States can be an expensive educational option, especially if you qualify for free or low-cost schooling in your home country. However, many students find that the international exposure and the high quality of studying is worth living abroad for several years. If you're an international student, you might qualify to cut costs by applying for scholarships and grants, or taking on roles like teaching or a research assistant. Depending on your program, research assistant roles may pay for all of your educational costs and provide you with a living stipend too. Whenever possible, try to avoid taking on debt to pay for educational costs. But if you're close to finishing a program, a student loan might pay off. When you're applying for student loans, be sure to compare rates from several lenders. So important. Different lenders have different policies related to international lending. Additionally, if you do take out student loans, try to refinance them within a few years of graduating. This will allow you to dramatically reduce the total cost of interest. If you live in the U.S., you can use a service like Credible to compare loans and get the best rates. That's all we have for you today, and I hope that was very helpful for you if you're looking for these loans. If you know somebody who is too, please feel free to share this podcast with them, and hopefully we can help each other out. You can find this article and tons of other resources too at thecollegeinvestor.com. Thanks again, and we'll talk to you again very soon.